Hey everybody, good afternoon. This is Doc with 12 Minute Trading, and I am joined by Dave with 12 Minute Trading as well too. Today is Monday the 26th of 2024 of February, right? And here we go again. We have a market which has just exploded to the upside last week on NVIDIA earnings, but what Dave and I are trying to figure out is like, okay, after 900, 1,000 points to the upside since October, what is going to push this market next? You know, are we going to see this thing continue to grind higher? Or are we going to see some type of a crash? Are we going to have a repeat of the beginning of 2018 again? Every market condition is different, but we're wondering what this thing is going to do next and how we can, we're not trying to predict the future, but we're trying to figure out is like, there's some obvious things that we can prepare for and anticipate and take advantage of. And so that's where we are right now. Dave, what are you seeing?
Well, there's a ton of things that are happening around this market, right? So like you said, we've gone up 900, 1,000 points on the S&P, 4,000 plus points on the NASDAQ 100, the NDX. And so common logic of things would say, and historical logical markets would say, okay, take a breather, right? It's time to just take a little bit of a breath, right? And that's typically what you would see, after you get to a level like this. And that's the thing, you mentioned it, all the news is out of the way. Like everything's priced in at this point. Yeah. There's nothing like new that needs is really out there. PCEs this week, but I think the market's already pricing in the Fed's gonna
3%
wait longer, and I think it's gonna be the summer before the market maybe really understands that the Fed may not lower rates at all this year, right? And we talked about this last time. If we don't do it by the summer, they're not going to do it because the election's in the fall and all that stuff, right?
What would you say is What would you say is the very latest meeting that the Fed would possibly do any kind of change in rate structure?
July would have to be the latest one.
Okay.
Because by the time you get into September and Jackson Hole and you're smack dab in the meat of election season, right. They're not going to mess around with that. So, and they may do a cut in July, but like 25 basis points, that's not going to do it. The market's still pricing in, 3 to 4 rate cuts, right? And that's probably not going to happen because inflation is going higher. And we've got some other things that are hitting the markets as well, too. There's a lot of stuff on the macro level that continues to deteriorate. And remember, the Fed always acts too late and stays way too long. And they're not going to spontaneously recover from that record of doing that, right? So they're probably going to hold too long before they cut, and that you're going to have some things that are happening. There's a lot of stocks that are not participating in this rally right now. In fact, it's like over 50% are falling below their 250-day moving averages. In fact, I was just doing some prep for our mastermind meeting tomorrow, and let me pull this up. I just want to get it right, because I was not surprised to see this, but it was definitely kind of sets it. So the NASDAQ 100 market cap change year to date, NVIDIA, Meta, Microsoft, and Amazon account for 1.5 trillion. The rest, all of the index, is 75 billion. So that's how concentrated we are. And so typically when you get into these times like this, it just takes one little pinprick into the balloon and you start to see issues and cracks and selling begins. So right now there's nothing, right? But it takes just any little thing that comes about as an excuse that the market needs to go lower and sell off or take some profits off the table. And that's kind of the world that we're in. Now, the other thing that we could also see, and you and I were talking about this, there was that period last year where we went through a bottoming event for all the banks that were having issues and all of that stuff. And then from April through the end of May, the market literally went nowhere. And you and I were on these meetings saying, guys, there's a big move going to come out of this because this thing is it is flat. It's going nowhere and charging up these charts. Well, guess what? We can see the exact same thing. We've got a weekly chart that is still in exhaustion, and we literally could go nowhere from here maybe a 200-point range, 5,100 to 4,900 on the SPX, 1,000-point range on the NDX, 17,000 to 18,000, and just waffle around in there for the next 6 to 8 weeks and charge this thing up and then get off to the races again. Or if something bad comes in, then you get the bigger move, right? So that is quite possible at this point. And we just are these doldrums, that the market gets into. And after a move like this, that would make sense. If you're not going to pull back, going sideways for a prolonged period would make a lot of sense.
Yeah,
so that's how we see it.
Absolutely. So I'm going to do a little doodling here. I'm going to bring this up again. Mm-hmm. So this is what we're seeing, and we're still kind of going back and forth. I've gone to a 9 period because it just wasn't making any sense. Once we got above 4,800 and we were at this level of exhaustion, it just kept on trucking. And so I went back from the 14 back to the 9. And right now, it's just a market which is just indestructible. But this is very similar to what we went through. Not to say that everything in the past has to rhyme, but this is very, very, very similar to 2017 when it just trucking all the way up and it didn't stop. But what shocked everybody, including myself, was just when you thought, okay, this thing is completely exhausted, and this thing is going to be taking a rest. We got into January, and all of a sudden, this thing just exploded higher. And wouldn't that be something if we went and did the same thing here? I think people would lose their minds. And we eventually hit the very lowest level that we had ever seen, which has only been replicated recently. We went through the exact same level. If you look at this, we are at the same level recently, right down here at the end of the year. Right, so amazing, and it just keeps on trucking. So, like Dave says,
you could make an argument that that last leg up is the parabolic kind of run up off this move.
Yeah,
you could, but
I've seen that so many times where it's like you'll see a move like the Nvidia news last week, and it ends up being a throw over. So you can almost think of this as like a clothesline. Like this, where you just throw your laundry over, and it ends up being the very final bull trap that all the retail traders just say, I can't stand this anymore. In fact, I love pointing this out, but psychologists have proved that being on the sideline during a massive bull run like this and not being invested in it is the most painful thing in investing. And it actually is more painful than actually being stopped out of a losing trade. A losing trade, you can say, well, at least I tried. But sitting on the sideline watching this thing run away without you is the most painful thing. And usually what people will do is the exact opposite of that. You'll see revenge trading. And this is why there's so many bears. It's like, okay, I missed this entire 1,000-point move to the upside. So now I'm going to become bearish, and they get rolled at the very end, and it's really sad to watch.
And there's nothing that says it can't keep going. I mean, in all honesty, there's nothing that says that, and I fully believe we're back into a more of a longer term bull market. It's just you typically will see pullbacks throughout those times, and it happens a couple times a year. Like even if you go back to 2021 and the run up before we got into the bear, we had a couple times during the year where it drew down 5 to 10%, right? And that is really, really normal to see. It just takes a catalyst, and until one presents itself, and the funny thing is when it happens, it's always hindsight 2020. Like, oh, everybody saw that. Well, they didn't because, it happens, right? But there's just an excuse that's needed. And we haven't seen it yet. It can happen any day. It could happen tomorrow. It could happen at any time. It's just whatever that excuse is going to be or whatever is going to be used. Remember, retail gets on board like this, and we've been seeing these wild swings. Like we talked about that SMCI trader and some of the other things that we've we've shown on here. And that's typically what you see from retail chasing and stuff at the end. That's those people that are like, they can't take it anymore, so they go all in and all that stuff. And that typically signals you're closer to the end of things. And so for us, it doesn't have to, but again, I wouldn't be surprised to see a 5 to 10% come out of nowhere and hit things and then be off to the races again to the upside. And that's when that's when everybody gets scared, right? Everybody's like, oh my God, we've fallen 10%. We're back down to 4,600 or 4,700 or whatever that is, right? And we're going back into a bear and it's the end of the world. No, that is actually the most natural thing for this market to do. And it cements that higher low. And that's where, if you've got a calm head and you know what you're doing, those times during the year are some of the absolute, I can make my entire profit goal for the entire year off a move like that. And so if you are poised and ready, you just take advantage of it. And so, and if it doesn't, you just continue working your strategies until an opportunity bigger presents itself, or you just keep working the strategies, right? So, it's not an area that or not a time where you have to make big changes or whatever. You just be prepared and be ready for it to happen and take advantage when it does. So
Dave, let's look at the NDX here. You trade the NDX a lot more than I do.
Sure.
And this actually appears to be in better position to maintain, surprisingly, than the S&P 500 does, because it's actually been doing some pretty good work here for the past 3 or 4 weeks. And you can
it did not take out the previous high, or close, I should say, above the previous high. It had a closing high and has not taken that out yet. The thing I've been watching is that daily chart heading lower and then kind of rolling over here. There is that gap that you can see around 17.7, right around in there. That, think of that kind of like a magnet to kind of pull things down to if it wants to. But it certainly, it certainly is in a position where it can just go sideways to like I said, 17,000 to 18,000 and just stay in that range for 6 to 8 weeks and charge that weekly chart up. The bigger thing on this chart, and you're pointing out now, is the monthly. The monthly on this chart is much more into exhaustion than the other charts. And that makes sense. If you look at the monthly, that is a parabolic move higher over the last, 4 months in this move. And so this is something where you start to go, okay, maybe we will see some rotation out of tech, right? It's led the way up. It is, it has really been the driver. Does the rest of the market start to participate? And what does that mean? Do we start to see the Russell start to trend and see the NASDAQ come down? But when you've got a monthly chart that is in that exhaustion level like that, that is something to pay attention to. But just know, we've seen it before, you can be in exhaustion in the monthly chart for 10 to 12 months. So it doesn't have to happen the next day, right? And so it just means that it may not be able to continue at the pace that it has been. And I think that is something, I think, for those that trade like iron condors on the NDX like me, makes me really, really excited. Because if that thing just goes nowhere for 12 months, I make a lot of money.
Yeah, the lowest value that we've ever seen in the NASDAQ was this end of 17, beginning of 18 low, and we're actually not down there yet. So we could have a few months left to go. Remember, at the beginning of the year, we talked about this potential cup with handle. This is a classic cup with handle.
That's true.
And so this is the measured move target. If we take that distance,
like 22,000 or something.
It's not bad. I mean, we figured on 6,100 on the SPX. So 6,100 could be, is that us predicting the future? No, not at all. It's merely just saying, hey, here's a formation, and in the past, what we typically will shoot for as a measured move is the depth of that cup. And so the depth of the cup is basically the 2022 bear market, and that's it. So if you append that to the top of the breakout, and that breakout definitely did come in November, December timeframe. So that's part of the same impulse move higher. So yeah, we are part of, if you zoom way out on this whole thing, back to here, we are part of, this is a much This goes all the way back to, for goodness sakes, this goes all the way back to the low in '09. This is what's called a secular bull market. And during that secular bull market, we're going to have little cyclical bear markets during this time. Each of these is going to be a cyclical bear. Cyclical is the smaller one, and that's in the context of a great big secular bull. So yeah, the further up that we go, the more that we're going to have these crazy moves, but it's going to, the more that we print, the more we inflate, the bigger these things have to be.
And someday, guys, it'll probably all come crashing down because of the fact that we'll be $120 trillion in debt and paying, $5 trillion a month in interest on it, or
500%, 500% of GDP. So, Dave,
right now we're by the end of this decade, we're supposed to be 50, 60 trillion in debt, right? So at some point, the whole darn thing just is no longer feasible and everything resets or whatever, right? So not to get into WEF stuff and everything like that, but as long as you're printing money, as long as you're debasing your currency, as long as you're doing that, markets, assets, things go up in price, not because they're gaining value, because your dollar's losing value. And that's what's happening, overall, right? In fact, I always laugh, and I've talked about this before, where the Fed targets 2% inflation, right? But it's still, if you look at 2% over the course of a decade, that's like a price of eggs going from 49 cents to $1.89 in like 10 years. Like that's a big difference in cost, right? And since just a few years, we're up 17%. The Fed hates it when inflation goes up really fast because that's when people notice. 2% a year, like it's like stealth stealing your money and your purchasing power. People don't notice it as much because they don't have that time reference of like 10 years. But when eggs are $1.89 and go to $7.55 in 2 months, people notice, and that's when the pitchforks come out. So that's why the Fed targets 2%. It's still a horrible, horrible thing, right? Unless you really can get your wages to keep up with it. And that's why I love trading the markets, because you can keep up with it by you keep your money moving, right? It's the velocity of money. You've got to keep it moving, got to keep it ahead of what's happening with inflation.
Yeah, that's one reason why I think there's still going to be a secular bull behind this, is because of assets will inflate, because they have to, because we will continue to debase. There's an upward
bias to the market over time, over the long term.
Yeah, and it's because of this inflation. So, yeah, by the time everything comes crashing down, I'll be living in a trailer in the middle of Death Valley, living on Bitcoin or something.
And things always go on way longer than anybody thinks they should, right? Like this run, this move. Everybody thinks it should have been done by now, but it's still chugging along.
Chugging along. Hey, you got a question for you from International Pet Sitter.
Oh, hey, how you doing? XND. Oh, yeah, I bought some defensive puts on XND last week ahead of NVDA. Just on my one trade, my one NDX Iron Condor, that I got over 2 times what I normally get on those trades. So nothing. I just let them go to expiration, exiting the trade close to full, target credit that I normally get, but little bit less, but profitable on that trade. So bottom is just in case, because we were at a level where we could have sank down to there if NVDA was not perfect, and it seems like they are. So nothing else. Just let them go to expiration. No point. You can buy them back for pennies if you want, but they were cheap, $60 or something like that, I think, a contract.
Hey guys, any other for those of you that are joining us live, any other questions? Let me know.
It looks like they aren't profitable. They were the hedge. The trade itself was profitable because I think I got $250 a contract on that trade. So I used $60 of it to give me some defense, and I normally get $120 on those trades. I still was ahead and still exiting for, close to profit target. So hopefully that helps.
And for those of you that are watching this on a replay, let us know if there's any questions that you have that you want us to cover in our next session, which will probably be next Monday. So we're happy to take your long distance requests, like his Casey Kasem would say.
But keep any questions coming and stuff for there. again, we're at that point. So just be, like I've said to my students, I've got a segment of my powder that I'm keeping dry. Even if we get a 3 to 5% correction, I'll start to put that to work. So I've got kind of that ready to go, and then I've got my normal capital that I trade consistently. One thing I am noticing, and I think you can attest to this too, short term in this market is the place to be. Short term trading, 2 to 4 weeks max out, is performing much better than longer term trading, because a lot of people know, like I typically will sell like long term iron condors, or put spreads, or even call spreads and things like that on stocks. And what I'm finding is, because of the IV being so low in this environment and volatility being almost non-existent, that you're just not getting any good fills going further out. But if you are short term, you're able to get decent fills, and you're getting to profit much faster. So you can turn your money over faster. So like my 50-50 trades are working really well. We were just talking, I had one on Palo Alto Networks that I did Friday. I was out this morning at open, a 1 day trade, and hit target on that thing. And most of those are like 1 to 3 days, 1 to 3 days and out. The double doubles continue to work really nicely. I'm closing some of them a little bit earlier for profit, just to turn the capital over again, but those continue to work pretty well. That's one trade that's fairly consistent no matter what the market's doing. But sometimes you'll have these runs, you'll have those adjustments for it, but they're pretty good. The campaign trade has been really rock solid, right, throughout all this, and really consistent. We have our own, kind of small little hedge fund account that we trade, and we're up, another 3 to 4%, every single month on that thing. And we're only trading with like 20% of the capital in that account right now. We're growing that thing, at a pace of 40+% for the year. So, and it's just using those strategies. So short term seems to be the place to be. And so until we get a bigger volatility or volatile event that comes in and really spikes it, right, I think that's where we're going to have to play.
My accounts, the number of accounts that I trade, I am up so far with 38 trading days into the year. I'm up 8.2%. So None of that's been stressful. I mean, that's kind of the way, we're protected against, overnight moves for the most part as well too. Yep. So we don't have to like sweat out any big nasty moves to the downside, which eventually will happen. We're always going to have black swans showing up. Okay. So yeah, Dave, there's an endorsement 50-50. For your 50-50.
Love it.
Okay.
Yeah, it just seems to, it's just faster, quicker. And I think some of that's happened because of also zero DTE and just the way like options are being traded now. It was, you can attest to this. We used to have one option cycle, the monthly option cycle. And everything was on that Friday. Everything was, but like there was nothing going on in between there. There's nothing that could move markets to that extent, right? And I think that's also how things have changed. We talked about this in our year in review event and everything too. So it's just a different world. You just adapt to it.
It's amazing. I've been going through my family took off for the weekend, and they're coming back tonight. So I usually use those times to I decrud. And I went through all my bookshelves, and I've got bookshelves and notebooks on, I've kept articles and stuff like that for the last 20 years. And I just went through, I filled out 2 bins outside that I can't wait to take to the curb tonight, because all the stuff is like, hey, sell this option with, 60 days to go. And everything's based on monthly options, and it's absolutely useless right now.
Worthless.
There's absolutely no reason for me to keep any of that stuff anymore. And the other thing too, and this is something that I'm always pushing, is like once you learn what you like to do, you're kind of done, because you can keep reinventing yourself and keep narrowing down your skill set on that one thing, and you just get better and better and better at it. It's kind of like the the Mario Rivera, where his only job was to come in and close out the 9th inning of a winning baseball game. That's it. He just had to get 9 strikes or 3 outs, however he could. And that's what you should all be trying to figure out. It's like, find out what gives you that rage to master, And, and once you do, you just, you don't have to waste your time like becoming a jack of all trades and master of none.
Well, and it's very true too, because a lot of like all you have to do is adapt. There's principles that stay consistent, right? Like for example, selling premium, right? It has a natural decay to that premium. Like that's not going away. Like that edge in the markets doesn't go away, right? But selling premium long term right now isn't effective as selling premium short term. So you adjust and you sell premium short term. There's some of these principles stay very, very consistent, and if you just based on what the market gives you and based on what's happening, if you can adapt your strategies, like the 50-50 strategy is really adapting really the double-double strategy to be a 2-week strategy, right? To take advantage faster, but it's got a few different things to take care of. Time decay. Like I don't stay into for as much profit target as I do in those trades, because they're so much further out of the money when they're sold at 4 weeks versus 2 weeks, right? But it's the same thing. I'm turning it over and I'm getting out faster and racking up the profits, right? So there's a lot of these principles that I think you'd agree that are consistent. You just have to adapt them to the market and that you're in and take advantage. But the strategies don't have to change that much.
No, it's just, and I think it's also important that as you finish a cycle of trades or a trade, is that you stop and you look at it and you say, what could I have done to make things better at that? Right. There's a reason why Tiger Woods in his heyday would finish a round of 18 holes and then go straight back out to the range and be working while everybody else is in the clubhouse at the 19th hole. He's out there in the range beating balls until his hands bleed because he's working on one specific thing. And so that's what you can do, and that's how you get better at this sort of thing. And it's crazy because once you find out what you like doing, it becomes sort of a mania. Like no, I can't go out tonight because I've got to document this trade. And it's like you get excited for stuff like that. Maybe I'm just nerding out on it, but it's like that's how you get somewhere in this business is to simplify and amplify your edges, like what Dave's talking about. So. Okay, I think we are, looks to be like we're out of time for today, so I appreciate everybody showing up and asking questions and making this a nice live session. There's always something interesting to talk about with the markets, and we look to you guys to point us in the direction that you'd like us to go in. So
and we'll be back next week. We'll see if PCE does anything. So that'll be that's the only other thing that's in the way right now for markets, right? So we'll see if that does anything.
Yeah, big time. So that and whoever the other 1,300 global events that are happening on any daily basis. So, thanks everybody. Have a great Monday, and we'll see you next month in the month of March next week. All right, adios.
Bye, guys.
And there we go.